All right, well, good afternoon, everybody, and welcome to the end of day market review for Thursday, July 5th, 2012. My name is Jason Waugh, one of the trainers and success coaches with Ideal Trading Lifestyle. I'll be walking us through today's presentation. Now, before we get started, we are going to ask that you give this disclaimer a quick read. Once you're done, we're going to dive into the agenda. All right, so on our agenda today, we're going to go ahead and take a look at the market news. We know that right now the markets are very much so dictated by what's coming out of Europe and with the economic data reports that are coming out of the States. Once we've done that, we're going to go ahead and take a look at some technical analysis charts. With this, we'll be looking at both the S&P 500 as well as the Toronto Stock Exchange. While reviewing these charts, we're going to be looking for support and resistance levels, as well as identify the location of their MACD. With this information, we'll be able to go ahead and get an idea of what we can expect for the rest of the week and the weeks to come. We're then going to go ahead and take a look at the volatility indicator, which is going to basically let us know how much volatility and how much fear is in the current marketplace. With this, we'll be able to tie the analysis from our charts and get a good idea as to whether or not we want to be trading for the day, and if so, how aggressively. Now, we're not going to be able to review any picks today. Unfortunately, there is no picks that showed up on our basic watch list, but this is to be expected after the statutory holiday from yesterday and then our slight down day today. So we'll just dive into any questions that customers might have and call it a day from there. So first things first, we did end up with a slightly down day today. Now, this is despite starting the day off with some optimism with the jobless reports declining. Unfortunately, though, there is some concern with the retail sales and that end of the sectors that were able to push the markets down, with some of the larger pushes moving oil and gold down. So all in all, we ended up with the Dow Jones down 0.36%, with the S&P 500 down 0.47%. So they're not very large losses, but they are a loss after the couple of good days that we ended up having. Now, oil is down 0.81%, putting it to 86.94 per barrel, and gold is down 1.02%. This is getting it to 1605.30 per ounce. Taking a look at the S&P 500, we can see very clearly that we did have that down day today, but this was after 3 great days. And this was after breaking through 2 levels of resistance. So what we're looking at now is to test the resistance that we had in place at 1365, which is now going to be support. The MACD is still rising bullish, and with the black line over top of the blue line, which says that it's very possible that we'll continue to see those rises. It is possible that we will break down below support, but right now we're going to just be optimistic. We're going to be comfortable with the fact that we're bullish. We're going to be comfortable with the fact that we've been continuously making new cycle highs and new cycle lows. So it makes the most sense to see some rises again in the week to come. Taking a look at the TSX here, we can see that it too has pulled back, and it will now be testing its support at 11,800. The MACD is also rising bullish with the black line over top of the blue line, suggesting that the markets are still strong. The only major difference here is that the TSX is really just starting its upward trend more recently. We haven't had a chance to truly establish higher cycle highs and cycle lows. We're still looking at cycle lows which have been trending down. So if we can pull back, test these support levels, and then work itself back up to higher highs, then we will have established both higher highs and higher lows, which will put the TSX in an upward trend. So right now the TSX is a little bit sideways. And the volatility indicator. Volatility indicator did creep up a little bit higher today. It is now up to 17.59. Now this is still below 20, which means we really don't need to be too concerned with where the volatility indicator is right now. Yes, it's very possible that the indicator could work itself up, just like it's very possible that the support levels on both the S&P 500 and the TSX could end up being violated and broken. The thing is, though, we don't know what's going to end up happening. We just know that right now there's no stocks to look at anyways, and we know that we have until tomorrow morning to really end up seeing what's going to end up happening. So we're going to definitely keep an eye on the opening news and the futures tomorrow and see what they're going to end up painting. If they end up saying that there's some negative news, people are still concerned with the economic data, then absolutely, we can end up seeing this volatility increase in value. But if we end up seeing that the markets are optimistic and they believe that we're going to end the week on a good note, then we'll definitely be able to have some faith in the support levels that we've established and expect the markets to continue to rise. So as mentioned earlier, we don't have anything on our basic watch list today. Advanced customers, if there's anything on your watch list, go ahead and take a look at it. Identify your profit targets, see what you can end up taking, but keep in mind that we definitely need to see what's going on tomorrow morning before we end up finalizing that trade. It's also important to note that we are going to be experiencing lower volume levels throughout the summer. So we should be a little bit more cautious with the amount of shares that we plan on purchasing, especially if we're really trying to nickel and dime the market. This is definitely a time to go ahead, take your profits, but don't try to be so precise where a penny or two is going to make a big difference. If you've got a profit target with a resistance that's 1.7% above you, ignore that 0.7% and just go for 1% profit targets. Obviously, the basic customers, you're going to be following the same methodology. You need to make sure that you've got 2% room to grow. That's 1% for yourself and 1% for covering any commissions or slippage or errors on your technical analysis. So this is definitely not the time to be greedy and try to be taking more money than we should be. All right, so just to end things up here, just a little bit of a reminder. These sessions are available daily. If we're online right now, we know that they start at 3:30 and they last about 10-15 minutes depending on what's going on in the marketplace. For the ITL customers, every week we do have a review of how the ITL picks are going and how they're expected to go, though we are taking a little bit of time off with Randy on holidays. Definitely, though, for our options customers, make sure that you can get yourselves plugged in to the August monthly refresher. This will be happening August 9th, which is a Thursday at 10 o'clock. So with that said, I'm just going to check my chat box here and see if there's any other questions. If not, we will make sure that this presentation is uploaded and ready to be viewed in the next hour or so. All right.